Hey traders, welcome to Charts and Coffee. Great to see everyone. Happy Friday, everybody. All right, hope everyone is doing well. Has not been a dull September at all. I'm going to talk a little bit about how I'm trading September right now, not speculation about where markets are going or anything like that, but rather how to keep your sanity right now when there's probably a small part of you that just might be a little freaked out about what you're seeing. But for traders, whether the market's going up or whether the market's going down, there is opportunity. So I'm going to walk you through what I've been doing. Really, it's not just through September because I was really looking for a little bit more organization in September, and not necessarily bearish organization, but what I think may happen or even speculate. And what I'm actually doing, there's a big chasm between that. So let me walk you through a little bit of what we're dealing with. And there's a pretty fresh transition that's happening today. And that is we're getting the very first glimpse of a red trend. So throughout Jackson Hole, CPI, and even the FOMC this week, we've been still clinging to that neutral market. And now we're getting our very first look at potentially a downtrend. Gang, whether it's uptrend or downtrend structure, if we have trending structure, and we won't know if this is set until Monday's close, so I require 2 days of that stability. But once we have that, well, we can start to shift some of our strategies. Now, for those of you saying, Rog, I don't know that I want to short, as I say, in the hole, and I certainly don't want to step in and buy. I'm with you. I dedicated an entire video to that particular topic and the specific pattern that I'm looking for to make sure I don't go step out in front of the bus, right? Now, in the meanwhile, this is where it's been so great. And I talk about this quite a bit. My mastery folks know this. Futures folks, I'll be in the day trading room with you all today for the open. What's the best, most freeing thing we can do? Short-term time frames, right? Short-term time frames. If you're concerned about, oh gosh, Rog, what's the macro going to present today? CPI, PCE, GDP, Fed fund futures, what's the target rate probability? So much, right? The easiest way to not have to be reliant on that data, reacting really to that data, shorten the time frame. And I go right back to magic hour, right back to 9:30. It's actually magic hour and 5 minutes, but I go right back to that 9:30 to 10:35 window. And then that way, whatever kind of structure we get on the open, that's what I'll focus on. And whatever structure happens after that, I really don't have to worry about it. I will be interested to see though, and I'll probably do that during our Ask Me Anything session, because remember, we have Powell at 2 p.m. today. So it should be an interesting close. And we'll take a look at that when I'm in the futures room and the sector secrets mastery for the last 90 minutes of the day. But day trading, gang, it's what we've been doing since mid-June. I know a lot of you know that. We did a day trading class to correspond with, hey, gang, right now there's a lot of macroeconomic uncertainty. We're going into summer. Why not shorten the time frames? And that's why we did the day trading class right at the onset of summer. And that's exactly what we've been doing for the most part ever since. All right. This show, however, is about your questions. So let's go ahead and dive into those. And that means we're kicking off with, here we go, Raghee. How are you? Thank you for your ever-present wisdom. You know, I appreciate that, Raghee. I just try to trade what I see. I try to take it one day at a time. I try not to get myself too excited about upside or too disappointed or fearful about downside, and just take it one day at a time. And remembering my time horizons. The trader in me doesn't care if we go up or down. And it's looking at a few hours to a few days to a few weeks. The investor in me says, look, Rog, 6 months in the span of an investing life, yes, it can give you heart palpitations when you're looking at all the pullbacks and volatility. But remember that when you look back, I believe it is to World War II, and pull out any 10-year segment of the market, at worst, over the course of a decade, we're flat. And I think you'd probably see something very similar if you go back to even 2000, Go back to the 7-year segments. So I got to remember the longer term investor in me has a far longer term time horizon. It's not about what happens in 6 months or even a year. It's 3 to 5 years. It's 5 to 7 years or more. And that's what helps me keep some sanity, just remembering my time horizons appropriate to the time frame. So thank you. I appreciate that. We appreciate you. I appreciate you. Thank you, Raghee. Any thoughts on the dollar yen on the daily time frame? Sure. Remember that the US dollar will continue to be propelled higher. This is not just possibly more hawkishness from the Federal Reserve, but the US dollar, what happened here? Unexpected. Okay, I'll just skip that for now. The US dollar will continue higher as long as the euro, the yen, and the pound are weaker than it. Because remember, currencies are always a comparison. So as long as those three currencies are weaker than the US dollar, the US dollar is able to keep moving higher. And dollar yen is absolutely by the dip. But that would include 6J. 6J would be sell the rip. So you might say, Rog, why is one heading higher, one heading lower? The Forex dollar yen, I don't know what I have in my eye here. Sorry, gang. The Forex dollar yen is quoted in dollar as the first currency and yen as the second. In the futures, it's yen as the first currency, dollar as the second. You might think, what's the difference, Rog? It's just a difference in the direction. So here, this is a directional play on the weakness in the yen relative to the dollar. And on the dollar yen, it's a directional play relative to the US dollar strength against the Japanese yen. So I would either short the rip on yen or buy the dip on dollar yen, same trade. So thanks for the currency question. I appreciate it. All right, next up. Hey there, Christian. For the past 2 weeks, I'm batting 1,000 on my SPX day trades. Awesome. SPX. All right. The SPX has taken the simpler community by storm. Whether that's been, the two people that I think about that have been doing a lot of SPX. And by the way, if you can't do SPX, SPY, ES futures, MES futures, there are so many flavors. SPY and SPX aren't quite the same, but there's options on both. Remember, SPX is really, and you have your options on the ES as well. So let me go, you know what, this is really, let's do this here real quick. So when we're looking at the S&P, so many flavors of the S&P. When we're doing the S&P, SPX is taking the simpler community by storm. Got to give a shout out to Cody, who does a lot of SPX trading. John's been doing some SPX trading. You all know that I like to trade the S&P futures, but whether you're going SPX, SPY, the ES mini, the MES micro, or the options on really any of those but the MES, you're taking advantage of a narrative around the S&P. And that's cool and exciting, and it gives so many traders so many ways to take advantage of the narrative. Absolutely. One of the things that we're doing right now is shout out to Bot. These are fresh out. Hey, Bot, can I show these? It doesn't matter. They're on the screen already. We have HPMRs for the SPX. So that's going to be something that I believe, Bot, when is the ETA on that? So those of you that have the premium hourly price movement ranges, we're cooking those up for SPX now too. A lot of requests for that. Okay. And let's see. Thanks for your teachings on a 5-minute. Oh, that's fantastic. So Christian, I never talk about the SPX directly, but what I love to remind everybody is if you know what your tools are measuring, you're going to use a slow stochastic overbought, oversold. You're going to use your hourly price movement ranges. Eventually y'all are going to have them too. You see that I have them on my chart. Look at this. Look at your resistance. Look at your support. This is the same stuff that we already run on ES and on SPY. So I am super stoked to hear you take that and flex into that other market. But wherever it is, and gang, wherever it is, you can control risk. As long as there's liquidity and you can control risk, go for it. And I think the tools are going to absolutely continue to work for you. Yeah, that's great. Made my day, Christian. Love hearing it. All right, next up, it looks like indices are turning double red. They are. They absolutely are. How am I looking at the price action these days? Karthik, short term. Exactly how I opened up our conversation. Short term. My mastery folks know this. My futures folks know this. I did not even touch the daily time frames through summer. Since mid-June, we started doing a little bit in August, and there was still a lot of volatility thanks to Jackson Hole. We've started to do a little bit now in September. When I say a little bit, we've got long puts in FXE, which has been a stellar trade. We've been in and out of Archer Daniel Midland, which has been okay. We've had small wins. And I believe, taking a look at where we are right now on Natty, we had an aggro trade on Natty, which is probably not long for this world. We'll be taking that one off the table very likely here. And so that's about where we've been. 2 out of 3, well, 3 out of 4, 3 winners, 4 losers on the daily. But on the intraday, we're getting about 3 to 4 to 5 setups a day, and it's been very active and it's been very good. And that's just in the hour and 5 minutes of the magic hour. How do you handle the price action? Free yourself up of the concern. I know we all have it. What's going to happen next? You know what I'm going to say? Nobody knows, right? And we can make big calls for new highs or big calls for testing whatever low. But if I can't give you a setup where I tell you, here's the entry, here's the stop, here's the target, all I've done is throw a target out there. And targets are not trades. The path to lower lows, the path to lower highs may not be necessarily paved with a manageable route, right? Meaning, remember the S&P, people have been calling for lower lows in the S&P for a while. But in the middle of all that, through summer, we rallied almost 800 points. Those are unmanageable bouts of volatility that might, not necessarily make a target a realistic trade, right? So shorten the time frame, my friend. I think you'll find a lot more peace in that. All right, next up is XLU. Safe haven. Tim, anytime we have defensives like staples, XLP and XLU, there's always a thought about, what can we do with these symbols? Is it worth going there? But again, there has to be a setup. We do have the beginning of a minor low. If the low from yesterday holds, let me move this into the view. If the low from yesterday holds, then we could look at potentially a breakout through 73.10. If you want to take advantage of the 200 propulsion, love it, Tim. I would have no problem with treating 71.65 as a more conservative entry and that minor low breakout as a more aggro one. So that would definitely be something to watch. All right, next up, the down open was shift market structure to that red trend. Absolutely. Do I now anticipate yearly lows? No, Kevin. The path of least resistance could be down. But again, let me go back to what I said before, gang, and I totally hear where you're coming from, and I totally get it. Everyone's calling for where the markets are going to go. But let me ask you, if I just gave you a target, anyone here, let's say I put out a target on the S&P or the NASDAQ or the Dow, and I say, we're going to test June lows, or we're going to test whatever lows. Does that mean you get in today? And how do you get in? And where's your stop? And how do you position size? You see what I'm saying? So whether or not we go to June lows actually doesn't matter to me. It never has. Whether we went to 4,600 or whether we went to 3,600, neither matters, because what I mean by that is if we're staying with short-term, now remember, I'm talking to the trader in all of us, not the one looking at our 401ks or our Roth IRAs or whatever. I'm talking to the traders in us. The trader shouldn't care, 4,600 or 3,600. And let's say I said 4,600. What if the path took us to 3,200 first and then to 3,600, right? Or let's say I put out 3,600, but we shot up to 4,000 and then went down to 3,600. Where's the risk management? So I try not to do any anticipation, because anticipation is then sort of cracking open the door to predicting, and predicting is not going to get us where we need to be. Now, mind you, there'll be a lot of folks as we get closer and closer to June lows that are saying, well, see, I told you so. But my response is always, what was the setup? And if there's no setup, there's no trade, right? So that's why I don't anticipate, my friend. And that's where, like I said, if we shorten the time frame, we just trade this market, whether that be as a day trader or as a short-term swing trader, it's going to free us up a whole lot more. All right. So we have a saying in the mastery: no post, no boast. And we've been day trading, which is why I've been talking so much about shortening the time frame and finding some sanity on a 5-minute interval. It really has been super helpful since mid-June, as many of you have found. Just being able to focus on that magic hour makes all the difference in the world. All right, next up. Hey there, Nick L. Do I have any of my own videos on YouTube about trading through an entity? Oh, you mean the Anderson Advisors? I don't make commentary on that kind of stuff because I neither have the expertise nor the knowledge. I pay folks to do that for me. So once we're in, and I love that you all are asking about trading through entities, because that means y'all are making money. You don't worry about asset protection and optimizing your trading activities unless you're, this is a fantastic problem to have. If you Google, if you go to simpletrading.com, I don't remember where and when that replay for Anderson is, but Anderson Advisors has their own YouTube channel as well. They do also have their own website. I will see if I can find some of the older replays, but one of the things I'll tell you, and it's probably time for me to give Toby a call, when we have shifts in what they're doing and what they're seeing for the coming year, almost every year there's a different type of preparation that they're going to recommend. So even older videos aren't necessarily as helpful, but they do talk about the structure. Nick, they do talk about the entity structure. So I don't have any personally. I'll have to look and see, because it's been a minute since we've had them in a webinar. And that just reminds me it's time to probably do that again. So thank you, Nick. And I'll see if I can't dig that up. So maybe nudge me on Monday, and I'll see if I can't get that video to y'all. All right. iScan getting better now. Rare to see double green. Hey there, Off-Road Bear. Yeah, there are some interesting corners. And everything you mentioned, isn't that interesting, Off-Road Bear, that those are probably as separate from the narrative around the broader averages as you can get right now. Isn't that crazy? So if we can separate to lower weighted or corners of the market that are not necessarily impacted by the S&P Dow NASDAQ, it's amazing what you'll find, because there are lots of narratives out there. Yeah, there are plenty narratives out there that don't necessarily move if the S&P moves higher or lower. And there's a great look. As much as I like to look at the correlated names, there is an advantage to having lesser correlated names, sectors that are not weighted in the S&P heavily, and stocks that are not heavily weighted in any major ETF or sector. So good, great eye, love it. Do I have any thoughts on ARK? Not really. Here's where time frame and time horizon come into play, which is, look, ARK had an unbelievable year. I think there's a lot of folks that are sort of jumping on the bashing them bandwagon. Look, I've never had a year like Kathy Wood, and I don't know anyone who actually really has at that scale. And yeah, it was a perfect storm, if you will, of opportunity for what ARK was heavily weighted in, which frankly was Tesla through 2020, and lots of stocks that did quite well during shutdown. And Kathy's going to have to rebuild the book, which I'm sure she's doing. Look at me talking about Kathy like we're on a first name basis, but I don't have any opinion on it. Here's my basic opinion, Sue. It's easy to kick somebody when they're down, and I will not do that, because I do believe that she has a longer term time horizon, 5 years. She said it herself, and she's had a bad 2 years. If the markets start heading higher, if the Federal Reserve hikes and starts cutting rates, we don't know what's going to happen, right? So I look at it this way. If I were to enter here at, say, $38, $38, $39, how can I control risk and not have a disproportionate amount of risk associated with this position in my portfolio. And it is a position trade in a portfolio, meaning minimum 6-month time horizon, preferably 3 to 5 years. Can I manage risk from a 38 or 39 entry, right? Or better, would it make sense if I were to, and this is where some V-score might be really interesting here. This is where some V-score might be really interesting. And maybe on Monday, I'll show you some very cool historic V-scores. In fact, I don't like well-chosen examples. Let me show you right here real quick, and then I got to go. Take a look at the way ARK did take off. And this is a V-score anchored to 2019, right? So this is your pre-pandemic year. This is the year that Powell continued to hike into Q4 2018. We had that 2019 Q1 sell-off. Low, 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 right? Now, until we get down to nearly a -3 standard deviation again, probably not a buy on the weekly chart of ARK, right? If we did the same thing, let's say on the S&P, right? And I took this thing clear back to, do I have this on? Maybe I have this on TradingView. Here we go. Let's say I went to the S&P and took this thing, the V-score clear back to 2006, 2008, this is when I built the V-score. And we'll talk a lot more about this because it's just becoming very relevant. Here's your tech crash. Here's the 2009 recovery after the 2007, 2008 financial crisis, right? 2008. Take a look. So when folks ask me, Rog, how do you rebuild a portfolio? How do you build a portfolio? How do you deploy cash? When do you know? One word, gang. Volume. Different ways of breaking down volume. So I hope that helps. And I think ARK fits in that same narrative, Sue. I hope that makes sense. We'll talk a lot more about this because when we can look at sell-offs as a reason we can trade and trade confidently with the volatility, but then also know that we have a plan that if a dramatic move is presented to us, I say presented to us, that we could have a gift. Maybe it's at, as you can see here, a +1 standard deviation, right? We can keep these things in mind and say, I have a plan if the market gets this level. And that plan is not panicking along the way. It's just literally saying, come on down. I know exactly what I'm going to do when that volume indicator reaches a level that I know previously has held. So you look at two extreme examples, tech bubble bursting and financial crisis, V-score was right there. So those are things that for me and what I'd love to impart to you all, that's what allows me to sleep at night. All right, gang. Thanks as always for the questions. I will see you on Sunday for our weekly Raghee report. Day trading room, sector secrets, folks. Sit tight. I'm heading over there right now. We're going to day trade the morning. See what today is going to bring. Be good to each other, gang. Stay positive. Keep your head up. Look for the opportunities, both short-term and long-term. Separate the two. Okay? Separate the two. I'll talk with you on Sunday.